the way we really learn is the way it's more optimal the way we learn in school, which is, you don't cover trigonometry in kindergarten. You cover kindergarten things first, and even kindergarten things are done not in a weekend. It's done over a period of time. Then there's first grade, and then there's second grade. The first thing I want you to know is that the most common trap zone is the trap zone between your two key moving averages. So let's say you have a 200 here and you have sort of like a 20 here. This will be a very common trap zone where your stock is actually between the two key moving averages. What a trap zone in essence is you have something significant that is above the current price, like the 20, and you have something rather significant below the price activity, like the 200. It's also important to note that moving averages, like everything else, they are zones or areas. They're not specific points or specific prices. That is why I'm demonstrating the moving average areas more as zones. And so you're always in a trap zone when something significant, not insignificant, something significant is above the price and something significant is also below the price. And this will tend to trap your stock between the two things that are significant. Now, it's not that it can't go through any of these things. That's possible. But the probability is that you get some type of pause at or near the significant thing, or some type of pullback, or some type of difficulty when there's something that is representative of resistance above you and support beneath you. All right. So this is the most common trap zone you'll see. Two major moving averages. Our major ones are the 20 and the 200. And boom. When you have this trap zone, the further a stock drops or rallies to one of the items, the more significant that item of support or resistance is. Let me give an example of this. If your stock has fallen a distance to reach the 200 is much more powerful. So if the stock has come a long way, if it's come from the heavens and then dropped to the 200, that 200 is far more powerful than starting from here. All right? Make sense so far? You see, that's come from way up here. This one's come from here. This is more powerful scenario. The 200 is far more powerful as support when a stock has been traveling a while to get to it, or from way above. Of course, this is the same in reverse. The item that's making the top of your trap zone is far more powerful if your stock has come a long way or come from way below to get to it. If it didn't come from way below, like this, and it started to move up from here, it's not as powerful because your start is from here versus your start from here. That's something that's very important to understand. You can be in a trap zone, but you need to understand when the trap zone support or the trap zone resistance is the most powerful and when it's not as powerful. Right. So what I mean by powerful, meaning that it's going to be more of like a brick wall or concrete ceiling. Like it's going to be hard for this one to get through resistance, having traveled so far to get to it. This is going to be much harder to get through the 200, having traveled so far or from so far above to get to it. It makes your trap zone more powerful. That is trap zone type number 1, moving average trap zones. You have price and moving average trap zone. Let me give you that example. And we'll summarize these two as well. Price and moving average combo trap zone is like this. Let's say you have the 200 and then you have your stock. And let's say you've got a 20, something like that, but your stock has come from up here. It's fallen sharply. Boom, 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 and it's come off. This is the price moving average trap zone. See, the first one was moving average trap zone between two moving averages. Now you've got moving average price. What's the price? Where the beginning of where your stock collapsed sharply from creates this zone of resistance. The origin, what I like to always say, the origin of pain. Where did pain begin? Pain started for the longs. Pain started right there. Boom! They started feeling the pain if you were long. Where was the beginning of that pain? Where did the collapse start from? What's the origin point? That origin point is a zone, is an area. You can extend into the future from that origin area and know that that is a negative, pain-filled memory point. That if the stock were to come up to that area, it would typically have a hard time getting through. The moving average support is beneath you. The overhead pain point of resistance is above you, and the stock is now trapped between both. You got this one? Price moving average trap zone. This was the moving average one. Moving average. This is moving average, right? And this is price moving average. Now, this is in the same in reverse, guys. So the same in reverse, right? With the price moving average. Don't forget that. So, for instance, you can have something like this. Here would be the reverse, moving average, and your stock. Boom. So your stock sharply rallies. This will create a supportive memory point that your stock is now stuck between the 200 above it and this sharp reversal memory point. If this is the memory point of pain, this is the memory point of greed. So basically, this sharp move up here gives buyers confidence if the stock comes down there to try to nibble again. All right. So support, price support, moving average resistance, price resistance, moving average support. So remember the two types here, guys. Remember, you can have moving average trap zone. You can have price moving average. Let's do it like that. Okay. And of course, this price one can be reversed. Your moving average can be the resistance. Your price bottom can be the support. Then there is the final one. So there are three types. These are two types. Type 1, moving average, trap zone. And then you've got price, moving average, trap zone. Then you have price, trap zone. Price, okay? Moving average, trap zone. Price, moving average, trap zone. Price, trap zone. Let's go over price. So let's say, for instance, you had a 200 here, and the 200 was ignored, but the stock sharply dropped hard. Boom, boom, boom. So the origin of that drop is resistance, a memory point filled with pain. If there are people still holding on for dear life from up here. They got caught long and they got slammed. Boom, boom. If the stock were to ever, they're hoping and praying, if the stock were to ever come close to them getting their money back, they would have a high propensity to sell. This is what creates the resistance. The people holding on are big sellers if the price comes back. Okay? So, price is when you have a sharp, violent drop creating this pain memory resistance zone, and you also get, boom, a sharp rally. So you've got now the bullish memory zone serving as support, and you've got the bearish memory zone serving as resistance. So your two key items is a pain memory point and a greed memory point, or a bearish memory point serving as resistance, or a bullish memory point. And now your stock will have this tendency of vacillating between these 2 points and not getting through. This is the price memory point. Moving averages have nothing to do with it. So do you have the 3 different types? Moving average. Let me do little versions of them. Price, moving average. And you have price. The 200 doesn't have to be there. I just, like, you don't need a 200 to have price. I show you the 200 there because I wanted to show you that in this scenario, the moving averages don't matter as much as the 2 points of the origin of violence. This is the origin of violence to the downside. This is the origin of violence to the upside. And now you're trapped between 2 origin points for violence. Now that we have the 3 types of trap zones, we're going to take a look at some things. But I got to cover one more thing. When is the trap zone is the freshest and the strongest? So let's do the price one, right? Boom. So this trap zone is the freshest as soon as the zone is established. So it's still fresh right now. It's fresh right here. Once you come off this low, you have a fresh trap zone because the bottom of the trap zone just got formed and the top just got formed. As you drift away, the trap zone becomes less fresh, less powerful. So there's this concept of time moving this way, away from the 2 points, away from the origin of the trap zone. Time heals all wounds. It gets less significant and less significant and less significant. The further you get away from the trap zone's origin, when it first formed itself, the weaker the trap zone. Time, this is your time. When time equals the length of the trap zone, when time equals the length of the trap zone, you're in a weakened trap zone state now. So if I were to stand time up this way, if I were to stand it vertically with the time reach the top, when the time is equal to the width of your trap zone and you go beyond that, you're in the weakened trap zone state, which means that your resistance and your support start to become less significant in the trap zone, more easily gotten through. All right. So think of it like this. Here's your price axis. That's the width of your trap zone. And when time, trap zone points, time is not long enough yet. Time, this is price, and this is time. Time has to get long enough to be equal. You see? So right now, time is still shorter than the width or the price axis. Do you see that? That time hasn't gotten there yet. It hasn't gotten long enough to equal the distance between the 2 points. Does this make sense? You got it? Time is not long enough yet. The trap zone is still powerful. The resistance points are still powerful. The support points are still powerful. Time has not traveled far enough yet. When time gets far enough to be equal or more, you see, now over here, your stock will not have as much problem getting through. Time and price, when they are equal or more, they kind of get neutralized. This is no difference, guys, from our daily lives. If an event happens in your life, in this case, this would represent a tragic event or an unpleasant event. The further you get away from that event, the less painful it becomes. So you are now, it's fresh here. It's fresh here. It's not as fresh. That event, as negative as it was, is not as fresh because a lot of time has separated you from the negative event. Same thing in the market. Now that we have this concept out of the way, let's take a look at a few things. Here's a 15-minute chart of Bitcoin. Take a look. Violent move up. Wow. And boom, violent move back down. You see your 2 points? Tell me you got this. Is that clear to you? That Bitcoin is trapped between 2 violent points, the origin of 2 violent moves. It's price trap zone. You see it? Beautiful, right? Now, look, any surprise? No, not for you anymore. The numbers of people in the world, do you understand how rare you are? Well, thanks to me, of course, but you know, you're rare. How many people can explain this to you in the world? Not many. So let's take a look at something else here. Let me show you. I want you to take this point here. Boom. Okay. This becomes more of, because this is an area, right? This becomes more of a price. Here's the origin of the drop. This is a price moving average trap zone. Okay. So price moving average. Here's your price origin resistance. Here's your moving average support. It's trapped between. Now look at it. Look at it just drift in the trap. Look at it come to the top and get pushed back. The top and get pushed back. Pushed back. And it eventually eventually it's gotta get untrapped. But it doesn't get untrapped in the beginning. It gets untrapped when the distance is equal to or more. Do you see this? Do you see that the time axis is now longer than the price distance? Can I get an amen? Can I get a witness? All right. This is a concept. It is not a tactic. Do you understand? There are certain things that are not necessarily triggers to do something. It's wisdom. Everything is not a trading tactic. All right. And that's a very novice mindset that everything needs to be a tactic. So what do I do with this? How do I make money with that? That's very novice, because there's things that represent trading wisdom that are not pull the trigger. Just know this. All right, this is something I want you to know, how to read the different types of trap zones, how to know when they are at the strongest state or when they are at a state where maybe this can get through now because my time axis is bigger than the price axis now. In a trap zone, when you have a horizontal part of the trap zone and a rising part of a trap zone, like you have here, the price is the horizontal, the moving average is the rising one, right? Most of the time, the rising one wins. So if your stock is trapped between a horizontal and a rising element, the rising element wins most of the time, meaning that your break out of this is more often than not in the direction of the rising item. So Bitcoin, because the 200 was your rising item, the break out of it was to the upside, not the downside. That's another important concept to understand. All right, the rising item tends to win. Let me show you this. Look at your rising item and your flat one. Here's the rising 20. You see the rising 20? And the overhead flat 200. And the stock is trapped between the two. So the stock is trapped, 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 trapped. But because the 20 is the rising item out of the two, you break in the direction of the rising item most of the time. You have this. You got it? Rising item. If one of your items is rising, that one typically wins the breakout. Do you realize how powerful this level of trading understanding is, guys? It's priceless. It takes decades and decades of being in the market every day to understand these things. You are getting a head start without putting the decades in. And guys, you can find this all over the place. Like I can just look at Tesla here. Look at Tesla start the day here and collapse. Look at the memory point. Remember, it's a zone. And look, it attempts to come up and get through. Is it getting through coming from way down here? No. Knowing this, that has come from way below to travel a long distance to revisit a powerful, violent origin point serving as resistance. What could you do right there? I know you know. I know you know. Just tell me anyway. You see it? That's right. Boom! What do I teach you to always do when something is pretty sizable? What do you do with this move? You cut it in half. Look at where you go. Boom. It's crazy. Do you see now that your trap zone, your new trap zone, is still here and there? You see that? Can I get a witness? The origin area here of that sharp, violent move back up, that is going to have very significant support area. And if it's wide enough, you can find trading opportunities. Bull 180, right off of major support, and the rest is history. So there you have it, guys. Deep dive on the trap zones. The three types of trap zones. Moving average, price moving average, price trap zone. We talked about how time When the time axis gets longer than the price axis, the trap zone is not as powerful. We also talked about how if you have one of the items in your trap zone that's rising while the other is horizontal or flat, the rising side typically produces the breakout of the trap zone. And we also talked about the fact that if the trap zone is wide enough and you get a powerful event like a bull 180 right off of, boom, bull 180 right off of the origin zone, you can give that a shot. Bottoming tail bar. Very powerful, guys. Now go to work. Put it to work. This is the type of concept that should give you almost a 3D ability to look into the markets now. It's like the type of thing that you can't unsee once you understand it. You can't stop seeing trap zones. If you really get this, you will never stop seeing them. It's like one of those truths that once you get it forever.